He was one of the first investors in Bitcoin and is the CEO of Bitcoin.com. He's such a vocal advocate for cryptocurrencies, he's earned the nickname Bitcoin Jesus. He told me why digital currencies are, as he says, a powerful innovation.
There's no one single place that any government or corporation or anybody at all could go to shut these cryptocurrencies down or turn them off or block them or censor them. And so that's a really, really powerful innovation, because before the invention of Bitcoin, you would have to get permission. If I wanted to send money from one country to another, or even within a country, I'd have to get permission from my bank. I'd have to get permission from the other person's bank. The banks would have to get permission from the various governments in the countries they're in. Now, thanks to the invention of Bitcoin, anyone, anywhere in the world can send and receive any amount of money with anyone else instantly, basically for free. And there's absolutely nothing anyone can do to block those payments or freeze those payments or control it in any way. And that's a really, really powerful tool for all of humankind, and it gives everybody more control of their own money, which I think is a great thing.
No question it's powerful for just the reason you described, because it's outside of any government control. That's right. Is that powerful quality also part of its weakness? In this sense, it also leaves it open to be used for illicit purposes, whether it's money laundering or drug dealing or potentially terrorist activities. And does that mean that government sooner or later will want to try to interfere with this, get control of it for just that reason?
Well, I think there's two parts to that answer there. So number one, the currency that's used for the most drug dealing and the most terrorist financing and the most bad things around the world clearly is the U.S. dollar. So if you're really worried about those sorts of things, you better be worried about the U.S. dollar. But at the same time, governments all over the world, what do? They look for the businesses or the people that have money, and they look for a way to take a portion of it. So it won't be any different with Bitcoin. Now that Bitcoin has this giant amount of traction and usage and huge market cap, and they're over $12,000 each now, of course governments are going to want to take a portion of that. But the exciting part about Bitcoin is that it makes it much, much more difficult for them to have control over that. And if you're someone who believes in economic freedom and believes that people should have control over their own money, it's a great thing that governments are going to have a harder time controlling what people do with their own Bitcoins.
Roger, as you know well, we're about to have some government regulation, not of the cryptocurrencies themselves, but of futures trading in it. We're just about to happen. We're on the cusp of it right now. In your estimation, understanding this entire world, what effect will that have on, for example, Bitcoin? Will it make it more valuable, less valuable? What will happen?
So the more utility anything has, the more valuable it becomes. So this obviously makes Bitcoin more valuable, and it also make it so the prices don't fluctuate as wildly as they have in the past, because people will be able to trade on these future markets, and that'll help dampen down the volatility. And if the volatility is dampened down a bit, it makes it even more useful in commerce. So it's this virtuous reinforcing cycle that makes it more and more useful. And the more useful it is, the more people will use it, and the more people that are using it, the more useful it becomes. So it's this fantastic circle.
People who are not as familiar with cryptocurrencies tend to think of it as being Bitcoin. Of course, it's not just Bitcoin. There's a Bitcoin Cash. There's different kinds of Bitcoin. There's also different kinds of cryptocurrencies entirely, like Ethereum. Could you explain what is the real difference, for example, between Bitcoin and Bitcoin Cash? Why should we care?
So you definitely should care about the difference between Bitcoin and Bitcoin Cash. So I was the first person in the entire world to start investing in Bitcoin startups and getting involved in the space. The Bitcoin that I got involved with let you send any amount of money with anyone, anywhere in the world instantly, basically for free. That's no longer true of Bitcoin or Bitcoin Core. Bitcoin split into two versions of Bitcoin back on August 1st. There's now Bitcoin Core and Bitcoin Cash. And Bitcoin Cash still allows you to do all the things that Bitcoin allowed you to do back in 2011, 2012, all the way up until around 2016. Bitcoin Core now costs about $5 every single time you want to use it, and the utility is really being undermined. So I've actually sold the majority of my Bitcoin Core coins recently and bought more Bitcoin Cash. And if you look at the price of each over the last several months, Bitcoin Cash has significantly outperformed Bitcoin Core. And if you look at the businesses around the world, they're scrambling to adopt Bitcoin Cash because it provides for a good user experience. So I'm really concerned with the markets right now. The price of Bitcoin Core is going crazy. But I think it's a lot of people that don't understand the utility behind it and are buying it just because they see the price going up, and they're chasing something without understanding it. Whereas the people that actually understand the utility that is underneath all these things are really bullish on Bitcoin Cash. And I'm definitely one of those people that's bullish on Bitcoin Cash.
Okay, so finally, to just that point, Bitcoin Core right now is over $12,000 last time I checked. And it seems to be going up and up and up. Where's it going to be in a year? Are people going to discover that it's not as useful as you just described, and therefore will it come down significantly?
I think it might go up a lot more from where it is right now, because people love to chase bubbles. So it might go to $20,000, $30,000, $40,000 before there's a significant correction. It's really hard to know.
Never did I think we'd do this. Willem Bouter on Bitcoin. I believe one of your ancestors at The Hague had a dabbling in tulip bulbs in the 17th century. Is there an equivalency of Bitcoin to the Bouter family's tulip bulb losses of 1638?
This is much crazier. At least with the tulip bulbs, there was some hope that you get a tulip out of it at some point. Bitcoin is at one level a pure speculative game. Right? It's a pure bubble. Right? It has no intrinsic value. However, it is costly to mine, so it's socially wasteful, like gold. Right? Gold you can still put in your ears, but Bitcoin is sort of digital gold,
right,
and completely useless. And it is a vehicle for crime and tax evasion, terrorism financing, money laundering, and illegal capital mobility.
You and I are advantaged. We have Carl Riccadonna on set, and we're going to thermodynamics and entropy. Or Carl, seriously, within any system, there's a thermodynamic relationship. And on Bitcoin, it uses a lot of electricity. On an entropic basis, it doesn't get it done, does it?
Absolutely. I think they have to focus on the carbon footprint of mining all of this Bitcoin, and there is a significant cost.
It's socially wasteful.
Right. Francine, you want to jump in here on entropy and thermodynamics?
Yeah, I do, because actually, Willem, just a simple question. There's a huge appetite, right, for something else, for some kind. I don't know what Bitcoin is exactly in your mind, but for an asset class that we don't have at the moment. So what does demand for Bitcoin actually tell us? So away from Bitcoin, but just the fact that there may be a gap that needs to be filled by something.
No, I really think there is no justification in terms of lack of assets to make Bitcoin into a viable instrument. The only lack of assets I see may be safe assets. Bitcoin is the opposite. Right? So this is really a pure speculative game. And unlike fiat money, which of course in principle is also a pure speculative game, Bitcoin is not the numeraire, it's not the unit of account, so it doesn't hold its value sort of in that way. It is not managed actively by a monetary authority. It is just a complete economic waste.
Bitcoin soars past $13,000 for the first time. The largest cryptocurrency by market value was selling for less than $1,000 at the start of the year. In recent days, several exchanges have come out with news on offering Bitcoin futures. Joining us now, Coinbase CEO Brian Armstrong. Coinbase is an online platform that allows users to buy or sell Bitcoin by connecting with their bank accounts. It has almost tripled its user base this last year, now standing at 13 million. So a wild ride, especially in the last few weeks. What do you see happening with this surge? Where is it going?
Well, there's certainly been this big influx of new interest in digital currency. Part of that has been driven by institutional money getting really interested in the space. So we've seen most of the large derivatives exchanges out there, CME, a number of others starting to say they're going to list Bitcoin futures. And so that's driven a lot of interest. It's a big signal that traditional financial institutions are now starting to move into digital currency. What is the CBOE, CME, NASDAQ, them trading these contracts? What does that mean for you? Does that create new challenges? Well, number one, it's just a big endorsement of the digital currency space, as this is a real asset class that more and more players are going to trade. But I think for us specifically, what it means is that we offer spot market data to a number of these providers, or we're discussing it with them. We run the largest institutional exchange in the United States called GDAX for digital currency. The other thing is that we are offering a custodian product where a lot of institutional investors need a secure way to store digital currency on behalf of their LPs and their clients. And so we launched a product recently on that for Coinbase Custody. So those are the ways that it might influence our business. Are you at all worried, though, that your clients might decide to go work with traditional mainstream Wall Street companies rather than Coinbase? Well, I mean, I think it's certainly an option. Like, there's going to be more and more people involved in the digital currency space. Like, we're not going to be the only ones. And so I think that's a good thing. Like, there's just going to be a diversity of players out there. There's going to be a lot of winners. But digital currency is moving so fast that I do think a company dedicated to it with 200 people who've built up this industry knowledge over the last 5 years is going to have a sustainable competitive advantage. Now, we have to talk about customer service. You've been experiencing a glitch, as you have with prior surges. Why does this happen? Yeah, well, I mean, it's, in a word, it's hypergrowth, right? We've hired from about 40 customer support agents to about 220 or so this year. And I think by the end of next year, we'll have another 400 or so. And so we're
in addition to the 200 that you already have?
Yeah. So, and we also launched phone support this year. So we are going through this period of growth that is almost never seen in business. It's really difficult, to be honest, to keep up with this amount of demand. And we're not servicing our customers to the level that they deserve at the moment. So that's really frustrating to see, but it's my job from the top to ensure that we're going to get there.
But can you explain a little bit more about why it happens? Like, is it a glitch?
Yeah.
Is it a crash? What's actually happening technically?
Oh, no. I mean, it's just a huge influx of new customers. Our volumes, whether you look at it as trading volume, new signups, everything, it's gone about 8x since June of this year, which is just unheard of. So it's really difficult to plan for that kind of capacity.
So it's literally that you don't have enough humans behind the scenes to receive all of these complaints?
Correct.
So, in addition to hiring new people, is there anything else that you can do?
Certainly we can always improve the product, right? Improving the product is a way to reduce the number of customer support tickets that are coming inbound. So, the team is working really hard on that. The kind of key metrics we look at are around, uptime, NPS score, average time to customer response. Those are the core metrics we're looking at to ensure that we're meeting our customer demands at this time.
Do you have any concerns that this will decrease trust among your customers? Or is that you'll lose new customers as a result of this?
Honestly, I do have that fear. Yeah, I think that it's really difficult to go through a period of this rapid growth and maintain the same level of service. And we've been watching those metrics, and they're not where we want them to be. So, growth is a really high quality problem to have, but it doesn't mean it's not a big problem. And I think especially in financial services, we're held to a much higher bar than, say, like the Twitter fail whale or something like that. We're storing people's money, and I think people are right to call us to a higher standard.
The IRS has been asking for more information about your holdings and your profits. What are you hearing from your clients about this?
Yeah, well, the IRS sent us a subpoena for a large number of customer records, in fact, all customer records, over a several-year period, which was pretty unprecedented. And so we did push back on that really strongly. We took it to court. The judge, I think, gave us a big vote of confidence, and they reduced the scope of the IRS request by 97%. It wasn't down to 0, which is where we think it should have been for something that broad, but it was certainly a partial victory. Now, I think if you look long term, we want to help people pay all their taxes on digital currency gains. What I think this should look like is something kind of like Fidelity or Charles Schwab, where everybody gets 1099 statements. The IRS gets a copy, our customers get a copy. It should be that simple. We're working with the IRS now, thankfully, to make sure that we come up with some kind of a solution where everyone's going to pay their taxes. But this is one of those new areas. Technology keeps finding a new box that doesn't fit into the existing framework quite perfectly, and we need to work with everybody out there to make sure we get there. Given
the uncertainty currently, as you work this out, are you giving any advice to your clients about how to report their gains to the IRS?
So, obviously we try to stay away from any sort of tax advice since that's not what we do. But we do provide a report to our customers, a cost basis report that they can export and send to their accountant. So that's the solution we have in the interim until there's something like 1099s or 1099s themselves.
Let's talk about what's happening with some of these other cryptocurrencies, Ethereum and Litecoin. You can trade on Coinbase. What do you see happening with Ethereum versus Bitcoin in the future?
Well, they've sort of evolved down different paths. Bitcoin used to be 95% of all the market cap of digital currency, and it's come down quite a bit. I think something maybe to 50 or 60%. And so Bitcoin is ending up, in my mind, being a little bit more like digital gold, if you will. It's kind of the oldest digital currency. It's the one that people flee to in times of uncertainty. But it hasn't scaled to become, for example, a payment network with the sort of transaction throughput that people might want. So Ethereum has kind of grown to do that, and Ethereum is now doing more transactions per day than Bitcoin. Ethereum also has this really innovative new concept of smart contracts, and so it's much more programmable than Bitcoin. Bitcoin you could think of as a simple 4-function calculator. You can send A to B or subtract B to A. Ethereum is almost like a programming language where you could write any software and run it on this globally decentralized computer. So that's kind of a mind-bending concept, but let's just say that Ethereum is higher throughput per second as a transaction network, and it's much more programmable.
You have launched a new app called Toshi, which seems sort of like an app store for Ethereum. Explain what you're trying to do here.
Yeah. Well, the analogy I like to use is of the internet. So when the internet started, you had TCP/IP and Usenet, and it was really difficult to use. And then a browser came out on top of the internet with Netscape, and it made it easy for anybody to build an app and also access the internet. So we're doing the same thing with Toshi. Toshi is, you can think of it as a browser for the Ethereum network. And we're trying to make it really easy for any developer to build an app and any consumer to actually use applications on the Ethereum network. And honestly, we're a little bit inspired by things like WeChat and in China, and Paytm in India, even M-Pesa in Kenya. Like, mobile money is a really big deal, especially outside the United States. And I think that people in emerging markets could actually use digital currency to start to get access to financial services through something like Toshi.
So when it comes to the price, how do you see Bitcoin versus Ethereum playing out? I mean, do you see the Bitcoin spike continuing? Do you see Ethereum surpassing Bitcoin, as some have suggested it will?
Yeah. Well, of course, I never want to be giving any investment advice, but I mean, just in broad strokes, the way I think of it is that Bitcoin does have a certain amount of guaranteed scarcity built in. There's only ever going to be 21 million coins. And of course, if something's more scarce, the price can be driven up. Ethereum has taken a different approach, which is that there may be a moderate inflation curve, almost like the US dollar. They might target 2 to 3% inflation a year. They're actually still deciding exactly what it's going to be. So Ethereum's not trying to be gold, which is what Bitcoin is. It's trying to be something more like a payment network or something more programmable. So that all factors into what the price will be. I guess one other really broad thing you could look at is just, where are the users going? And where are the developers building the new apps? I personally see more developers building apps on top of Ethereum today. So that's one other factor which could point to what it might be in the future.
We talk about this a lot on Bloomberg, whether, is Bitcoin a fraud? Is it not? Are we in a bubble? Are we not? If it's not a fraud, is it a bubble? What do you think?
Well, I mean, I certainly don't think it's a fraud. I mean, is it a bubble? Maybe. I mean, digital currency has gone through a number of these periods where there's a big run up and then it'll correct back, but you're at a new plateau each time it goes up and it kind of comes back a little bit. So I think we're going through the most recent run up period. It's probably the fourth one we've been through as a company. And I would expect it to correct back at some point, but continue over time in an upward channel.
There's an update to the Bitcoin network called SegWit, which would speed up transactions. You guys haven't implemented that yet. Do you plan to, and when?
Yeah, it is one of the things we're looking at adding. It's probably not in the top 5 next things that our customers are requesting.
What are the top 5 next things?
People want more assets on the platform. They want a better experience, meaning like identity verification, higher limits, the sign-up onboarding experience. And then they're asking for these new products, like our institutional customers are asking for a custodian product. People are looking at a way to just trade more assets, have a better experience, and store it securely.
Is it in a bubble, Bill? And I ask because I wonder, if it is in a bubble and it does pop, what's going to be the spillover effect into other asset classes, into bonds, into stocks, into currencies?
Well, the going up doesn't seem to have affected asset prices and bonds significantly. Anytime any bubble pops, however, it's an indication that something else may follow, and so I think it pays to be cautious in terms of not only buying it but following it as it moves up and then potentially moves back down. So when bubbles pop, whether they're small and relatively insignificant in terms of the total credit of global credit, I think it's a potential forerunner for other assets, and so investors should be careful.
And this is a great point, actually, Bob, because you highlight this in your investment outlook when you look at the difference between cash and credit and say, look, when we start to see investors turning more to cash versus on cash equivalents over credit, then there's the potential here for some kind of liquidity breakdown in the system. And that's actually how you mentioned Bitcoin as one of those cash equivalents. Is that the prism upon which investors should be looking here at Bitcoin, as perhaps that divergence now between cash and cash equivalents and credit?
Yeah, I think investors are looking at it as an investment at the moment, as a mania that's fulfilling, upward and upward price movements. And so it's not really a currency alternative at the moment, But with low interest rates, and in many cases, $4 to $5 trillion worth of negative interest rates, ultimately investors, and I'm talking about small investors, I'm not talking about institutions that have to invest at negative interest rates, but small investors have a choice, and they can go to cash, and they can go to the mattress, or they can go to Bitcoin. And so, that perhaps is the, the foundation for this movement, not necessarily at $16,000 or $17,000 of Bitcoin, but maybe at its beginning, down below $1,000.
Hey, Gary, guess what I'm going to ask you next about markets? Bitcoin. Is the White House watching what's happening with Bitcoin? And what are you thinking right now, Gary? Is this a serious risk? Is it something you're worried about?
We're watching it. Of course, we're watching it. Right now, we don't think it's a serious risk, but clearly we're watching.
Is it something you want to act on, though, Gary? The IRS, is it something that they should be looking at? Is it something you think needs to be regulated?
Well, as you know, I think that the CFTC has approved a couple futures contracts. We'll see what effect that has. It will allow people the ability to short it. There's never been a transparent market in Bitcoin. We'll see what goes on here. It's an evolving market. We've watched this happen before as markets have evolved.
Now, Bitcoin surged more than 20% in the last 24 hours. It is up nearly 50% in the month of December alone. The digital asset is at another record high, on its way towards $15,000 with no sign that it's going to turn around anytime soon. What do we, or how do we go about strategizing then with cryptocurrencies? Is it the same as with other financial assets? Joining us from Singapore to discuss is Mark Cudmore, who's been doing a little bit of reading into the subject, Bloomberg MLive strategist. Mark, what have you found in your research? Because I know you've been looking a lot deeper into Bitcoin over the last couple of days, as have obviously a lot of people in the markets.
Well, I think it's important to emphasize that you can't use any of the standard metrics for measuring Bitcoin. Any target seems kind of laughable. We discussed this a few weeks ago, whether when people were targeting 10,000, it was irrelevant whether they said 10,000, 50,000, 100,000. They're all as irrelevant because it's completely arbitrary. It's when the belief will run out. This is a study in human psychology. It doesn't yield anything, and the vast majority of people buying it are buying it to hold or buying it to speculate. So it's the point when we get no marginal buyer. It's the point when kind of everyone goes, you know what, everyone is fully invested. Everyone who would be tempted is fully invested, fully bought in. I personally believe we're a long way away from that, and that's why I still remain very bullish despite my cynicism of Bitcoin as an asset. I think crypto technology is amazing. That's completely different. But Bitcoin itself, I don't think is a viable currency, and I do think it'll long-term collapse, but I think it can go an awful lot higher still. I think somebody who says 50,000 a target is not crazy, 100,000 is not crazy. There's no reason to have a limit. This is purely about human psychology. So when you're studying this, I'm not even sure it should be on the markets program. It should be a psychology program.
Should it be an energy program? This is a weird question, Mark, but in the last 24, 48 hours, 2 or 3 people have said to me, the energy consumption required for mining Bitcoin is rising massively at the moment, and it's shifting from Nordic countries to China, which is another kind of political factor to bear in mind. But the consumption is now equivalent to running the whole of Ireland. Or I saw Serbia this morning. The energy levels required to make this happen are amazing.
Yeah, absolutely. Not only is it expensive, but some people might argue it's becoming a climate concern. I wonder when we'll start seeing a Bitcoin debate where people who are kind of environmentalists start campaigning against Bitcoin because it's doing major damage because the fossil fuels that have been burned to generate the energy for Bitcoin mining. But it is a massive expense. But it is typical of when you get any speculative bubble, and Bitcoin is the very kind of perfect example of a speculative bubble. And I do kind of go along with Mike Novogratz, who are probably still in early enough stages of it, so it may last for many more months. But in any speculative bubble, what you get is a misallocation of resources. It's bad for the economy because you get all this money that starts pouring in to basically a pointless exercise and using all the energy for that and tying up all their capital in that. And then at some point in the future, they keep on making lots of money, but it's paper money. And if it collapses,
how is it pointless?
Well, yes, I think it is essentially pointless.
I fail to see how it's pointless. I mean, especially if you were mining at 600, at 900, if you were mining at 2,000, if you were mining at 5,000, it's not pointless because Bitcoin is now worth $15,000, Mark.
you've made a lot of money, but you've not done anything for the economy. So it's a very good speculative vehicle. I think I think it is the best speculative vehicle. Part of the reason I'm very bullish about it is because you know what, people have realized what an amazing speculative vehicle it is because they want to hold it. Everyone's bought into it. Everyone is not willing to sell. They're not even worried if there's a pullback. A 30% pullback won't make them sell it. They're not buying it to use it. They're buying it to hold on, and they're hoping to buy more and dip. So I think it's an amazing speculative vehicle. I think you can make lots of money, but it doesn't provide any use to the economy. Instead, it ties up lots of capital and uses lots of energy that could be used for other things. So it's a misallocation of resources. But it does definitely help you make lots of money if you sell out. However, what you're going to see ultimately is a massive transfer of wealth because some people will be very smart and will take a lot of profit whenever they want to take it, but they'll make a lot of profit. But you know what? At some point, this will collapse, and that might be after it reaches 65,000. It might be after it reaches 100,000. But this will collapse, and people who thought they were very wealthy will suddenly become bankrupt overnight, and it's going to cause a lot of upset.
You want to hear something absolutely shocking, even equally shocking to the Vanguard numbers we went over earlier, is the best performing ETF of the year, drumroll, it's active. The inactively managed ETF is up 86%. It's called the ARK Innovation ETF. What does it do? It's basically an ETF that goes after disruptive themes, disruptive innovation. And if we look at the holdings and how it got this gargantuan performance this year, we look at some of the holdings. We talked Bitcoin earlier. It holds GBTC, which is the Bitcoin Private Trust. It owns Tesla. It owns Amazon. It owns Netflix. It owns Twitter. Basically, it's about half biotech and internet, about half small and large cap, mid cap stocks. You can see some of the holdings here. GBTC, even though we talked about some of the issues of the premium, this bad boy is up 1,200% this year, and that's given this fund a big kick. And if we look at how this has affected the flows in ARKK, it's really fascinating because, again, this fund is going up against the odds. This is an actively managed fund, and it's independent issued, but they've seen their assets go from 60 million to 600 million. And I call it Babe Ruth mentality. I think for active, if you beat the market by a little, it doesn't really get attention anymore. But if you can beat it by 2 or 3-fold and really hit a home run, the flows will follow. And that's what we've seen so far this year.
Yeah, and that's why we brought up Aaron Judge, the modern-day Babe Ruth, because if you get those returns, it doesn't matter that the cost here is 75 basis points. Let's bring in Kathy Wood, CEO of ARK Invest, and clearly these are incredible returns, as Eric was just showing us. It's an actively managed ETF as well, so talk a little bit about your investment process, Kathy. Do you have a system in place that you adhere to? Do you adjust it?
So our focus is solely on disruptive innovation. And we are focused on 5 innovation platforms that are evolving at the same time. This has never happened before. You have to go back to the late 1800s to see this much innovation. So DNA sequencing, robotics, energy storage, so think electric vehicles and autonomous taxi networks, next generation internet, so artificial intelligence, blockchain technology. Those are the 5 platforms. That's our sole focus. And I think since Brexit, interestingly, we have been through 4 risk-off periods from 2013 when we first broke out to new highs for the S&P, and through Brexit, 4 risk-off periods, tough on this strategy. Get through Brexit, get through a bit of a bull market, and investors are beginning to extend their time horizons.
So I post your returns on Twitter. I did a segment like 2 weeks ago because, look, it's at the top of my leaderboard. I have to talk about it, right? The pushback is, hey, come on, this is a child of the bull market. This is the kind of fund that's just going to lose a lot in a hurry. What's your answer back to that kind of like, oh, this is just a high flyer type objection?
So we believe we are in the most inefficiently priced part of the market. We've seen the market since the 90s move more and more towards passive, and if not passive, then benchmark sensitive, right? And you've seen a lot of public money go pre-IPO into the private markets. That's left greenfield for us to explore. We believe if you look at our portfolio and you do a correct analysis, a long-term time horizon, discounted cash flows, that we actually are a deep value portfolio. I know that sounds crazy, but given the opportunities in these innovation platforms and the kind of growth they're going to generate during the next 5, 10, 15 years, we think that market is not pricing our stocks even now efficiently.
All right, so it all depends on your time horizon, your perspective here. But what's not a deep value proposition right now is Bitcoin. And if you look at GBTC, powering your returns clearly, Eric mentioned how it's trading at a huge premium to its net asset value. We spoke with Andrew Left of Citron Research on GBTC, and here's what he says will happen once Bitcoin futures begin trading. Take a listen.
As soon as futures come on the Bitcoin market, we should see the price of the ETFs or whatever form of derivative that trades, possibly a 3% to 7% premium to net asset value versus 35%. So yeah, it's very compelling whenever that spread opens up on GBTC. Now, the risk is if you short that naked without the hedge, is you're short Bitcoin, and even being short Bitcoin 25, 30% higher, who knows what happens over a long weekend.
So big question mark as to what it does to the Bitcoin market. He also says that you might see the premium collapse maybe 3% or 4%. Is he right?
Well, the premium has actually come in very recently in the last couple of days because Grayscale has opened up its private placement of Bitcoin Investment Trust.
But not just 3% or 4%.
No, it's not 3% or 4%, but it came in quite a bit yesterday. We have seen Bitcoin. We started with Bitcoin in September of 2015 when it was $250. Today, $12,000, $13,000. We have seen Bitcoin battle tested every step of the way. There has been a lot of turmoil, and the uptrend has not been broken. Bitcoin is a $200 billion market cap, roughly. Apple is almost $1 trillion. Bitcoin is a very big idea, a much bigger idea than Apple. This has only begun.
I would put about a third of it in commodities. And most notable of those commodities would be platinum and palladium. A third of it would be, I would put it into Africa, African stock markets, particularly places like Nigeria, Zimbabwe, Kenya, and South Africa. And the last third, I'd probably put that into Vietnam. That's probably one of the most dynamic at this stage and quite interesting.
Would definitely have some infrastructure into it. The savings gap in Asia is enormous, 30 trillion. So I would definitely have money in that. I would definitely have money in tech and in Asia. I think, the big countries, China, Indonesia. So anything that can help with the climate change issue, it can be smart metering, it can be more efficient production, it can be battery. That remains an investment theme that's important.
I would put it in emerging markets, especially emerging Asia, because the demographic here is good, young, productive, innovative, and growing. So I think, it's a secular investment opportunity to be had. But, we have to face near-term bumpiness first.
With Bitcoin, at least on Coinbase, which is the biggest consumer-facing exchange, it almost hit 20,000. 19,697 is the number that we had in U.S. trading. When looking at what happened with Bitcoin, at least on Coinbase, which is the biggest consumer-facing exchange, it almost hit 20,000. 19,697 is the number that we had in U.S. trading. Take a look at #BTV3101. The Coinbase exchange is in the white line. You can see this really almost just hit the 20,000 mark. Right now we're trading at about 17,000 on Coinbase. But take a look also at the blue line, because that is actually XBT currency. That is a Bitcoin. And you can see that it's trading, or it did trade at least at a premium of about $3,000 when it was trading at nearly that 20,000 level. Now, people are saying that this is clearly people rushing in, trying to get in before what some analysts are saying could be an even further rise to maybe $50,000 or so. One interesting thing about Coinbase, though, is that during U.S. trading, it actually crashed for about half an hour, and that caused trading, of course, to halt there. So this surging demand is now being a question on whether these exchanges can actually hold, especially as we go into futures on Sunday with the CBOE. My next Bloomberg Terminal chart, #BTV6021. Taking a look at the right-hand side of the board here, you see the general uptrend of the higher highs versus the lows, which definitely are not very low at all. Just in the past day, we were up by 20%, as much as 20%, hitting to near that 16,000 mark. But right now, we're just about 1% higher. But of course, it's early hours in Asia trading here. But generally, we can see that while over the past few to several months, we can see the ups and downs. Clearly, there are more ups than downs just right now. And finally, #BTV6308. I want to put this into context with a normal safe haven that we've been using for hundreds, thousands of years. That, of course, is gold. And this red line here is not the flat line. That is not zero. That's actually the rise in gold over the past year, up by 7.6%. But of course, we've been saying that Bitcoin now over the course of the year is up by nearly 1,500%. And it is now trading at a premium, 13 times more expensive than gold. But, you know, a lot of people are saying, of course, that gold is something that we can rely on. Can we rely on Bitcoin? That is another question. Those are your 3 Bloomberg Terminal charts we need to know on Bitcoin. More coming soon.
It's been so easy for a long time, I think. All the sane, sober, wise people say it's a bubble. It's going to burst. Some have said it's a fraud. But tell us, is it? Or is it feeling less? Sure, it's new. It's like the Wild West. But is it here to stay? And is it something we should all be considering investing in, or at least taking more seriously?
Well, from a generational standpoint, we see that millennials really don't have much trust in the existing financial system. And they're the first generation that's really grown up on technology. So to this extent, they're the ones who are going to be leading the adoption with respect to cryptocurrencies and Bitcoin in particular. Now, given the fact that we were having cryptocurrencies with a market value, you know, a few days ago it was $300 billion, obviously with the run recently, maybe we're approaching $500 billion. But nonetheless, you create that kind of value, and you're going to find a way to have the value there created there work its way into the real economy. You're going to find retailers trying to find ways to take payment in Bitcoin. Now, there are some substantial barriers or some substantial issues. Transaction processing times in Bitcoin as a payment mechanism. Visa operates 20 times faster than Bitcoin. So from a practical standpoint, there's some challenges there. You know, we're fortunate right now with the CME and CBOE futures starting to trade that those are going to be dollar-denominated settlement contracts. You're not going to have to settle in Bitcoins. But nonetheless, there is going to be an impact as the markets there become more efficient in terms of how Bitcoin itself actually gets priced.
Well, but there's already people in financial services industry saying CFTC made this approval far too quickly, and that in fact this is an implicit seal of approval which will lure more unsuspecting people into a Bitcoin investment of some kind when it's up 1,000%. I mean, doesn't this feel a little bit, maybe Bitcoin is here to stay, but doesn't this feel a little bit like tulip mania?
Well, clearly, you know, there has been a meteoric rise, and given the fact that we saw a lot of behavior in the markets back in the late 1990s, there certainly are echoes. But nevertheless, you do have very well-respected intermediaries in the financial markets, such as Goldman Sachs, saying that, look, we'll clear these futures trades. And arguably, you know, if there is a way to make a legitimate profit, Goldman Sachs will find a way to get into the business. And if Goldman's in it, trust me, many others will be as well.
David, I'm just curious, as I was watching Ramey's charts there, particularly Bitcoin versus gold, if somebody were to offer you an ounce of gold worth $1,300 in your hand or 1 Bitcoin in a digital wallet, which would you choose?
Well, one might argue that there are easier ways to go about hedging the exposure that you have in gold presently. That will be changing as far as Bitcoin is concerned. Nevertheless, I would say given sort of the future appreciation potential, given this kind of environment that we're in, I would opt to take the equivalent value in Bitcoin over the equivalent value in gold.